Hi, welcome back to the channel. Today I would like to talk about the 6 types of insurance an 18-year-old should know. So the first one is the most popular and basic insurance known as the term. So these are very low cost and they pay out in the event of death or TPD, also known as total permanent disability. So this means you lose 2 limbs, for example, both eyes, 1 leg, 1 arm, etc. So the purpose of term insurance is to cover your dependents upon your death. When we first contribute to our CPF, we will then have automatic enrollment into a government one called the Dependents Protection Scheme for about 70k. But this is definitely insufficient and should be supplemented with something more personal. So I would suggest an amount that is sufficient to cover your dependents. So that is your parents till their death if they really require your allowance, as well as your kids till university, whereby after which they should be self-sufficient. So I'll rate this a 5 out of 5 and it's a must get. So one suggestion I can give you is to use a direct purchase insurance, which means you skip out the agent and you don't pay any fees at all and you go straight to the company. So you can just search for this, and then from what I see now, it's about for 400k coverage, it's about $25 per month only. So the next one is whole life insurance, which most of our parents will have. So you can think of this as a term insurance with a saving component. So a lot of Singaporeans like this because there is a guaranteed portion at the end of the expiry of the insurance. But of course, where do you think this guaranteed portion comes from? It's definitely from your premium when you pay. So as part of your premium goes towards the saving component rather than covering you for insurance, it's generally more expensive than term with less coverage. So I would not recommend this and I'll rate this a 1 out of 5. So the next one is accident or personal accident insurance. So this kind of insurance will pay out in the event of a small accident. So things like burns, fractures, and they'll pay for, let's say, if you want your TCM treatment. So I feel that for such low cost, it is cheaper for you to self-insure. And the reason why is that it tends to be abused. So for example, if you have already paid, let's say, I don't know, $200 this year and you didn't go, you will feel you loogie. And therefore, no matter what you try and find, go visit a TCM, do a twin just to get back your money. And what happens next year? The insurance companies will then increase the premiums to cover your costs. So I would not suggest this if you really don't need it. So I'll give this a 2 out of 5. So next would be the hospitalization insurance, also known as an integrated shield plan. So this is a top-up of the mandatory MediShield Life which we have enrolled in the government. So generally, this will cover your inpatient treatments whereby you are warded in the hospital and some outpatient treatments, for example, chemotherapy. So this gives you the optionality to upgrade your ward. So for example, B1, A and private. But don't think of the benefit as more of a comfortable stay, but think of it as the option to go for private treatment, which are generally faster for non-life-threatening illnesses. But in the event you have a very life-threatening illness, I believe the public hospital will still prioritize you. So I will rate this a 5 out of 5. Get it when you're young, when there's no loading, there's no exclusion, and it is a must get. Next would be critical or early critical illness. So this kind of policy will pay out one time in the event of a diagnosis of a critical illness, like maybe heart attack. So ECI is definitely more expensive because it covers stage 0 to 2, while CI will cover the later stages, which is 3 and 4. So these are used for cash flow. If you want to, let's say, stop your job, you get a lump sum and then you can quit your job. So there's no need to worry if you cannot afford this, because in the event you really kena a stroke or a heart attack, your public hospital expenses will still be covered by your ISP and your MediShield Life. So these are just a supplement and top up above the hospital bills. So I'll rate this as a 3 out of 5. Good to have for peace of mind, otherwise not really required. So last is the most controversial one, which is the investment linked insurance or ILPs. So these are like an insurance agent's best friend because of the high commissions they make from you. So for example, an ILP will be structured something like 45% of your first year premiums go to the insurance agent as their commission. Next year 25%, then third year 5%, and then like maybe it tapers off. So that is why they are so excited to sell you this, and then wherever you find a new agent, they will tell you the previous agent's plans are no good, buy from him, because they make the most from the first and the second year from you. And when you buy such plans, they will usually say, oh, I'll top up an additional bonus for you. When you put in 100k, I'll put in an additional maybe 50k for you. But at the end of the day, the math doesn't work out in your favor. So these are usually plans with high expense ratio, switching costs, surrender fees, and I will say absolutely avoid these plans if you can. So thank you very much for watching this channel.